Video 3, July 23rd, 2022. This is probably going to be the most important video for a lot of you, especially if you're day trading or even scalping. So this is my plans going to trading. I haven't done a video like this in about a month. Keep in mind, I'm a trader. I'm not an entertainer. I'm not getting paid for clicks, and I don't even care if you like the videos or follow. It is what it is. But right now, I am opening some puts because the data is really bad, as I did in the last video. I'm saying really bad. Really, really bad. I don't know what they're trying to tell you on TV because I'm watching CNBC daily, but the data is horrible. Horrible, not getting better, getting worse. Okay, CPI just hit 9.1 from an 8.6, and they thought it was going to go down, not up. Rates are going higher and earnings are starting to miss. So that is getting worse, not better, and we're going new highs. But because it's an auction, people have FOMO. There's pent-up of demand to rally more, and retail is big right now. Retail is about 30% of daily volume, and it used to be 15% in 2019. I'm not saying it's always 30%, but it's about 30%, and it was about 15%. So a lot of new retail, they can't make money on the downside. So anything, they will go pile up together and make things go up. A lot of people are scared of shorts, scared of puts, and I don't blame them. I haven't shorted since 2014. I didn't buy puts since 2017. I bought puts starting in October of 2021. So I wasn't on the short side either. So I don't blame them if they don't want to do it. So because everyone's rallying, I've opened up about 5 puts. I want to open 1 put a day up to holding 10 puts. Each put I buy, I'm spending about $2,000. I'll buy some calls, and I'm trading shares of KOLD almost daily. KOLD is a bearish natural gas. It's very volatile. I'm making money on every single day right now. Very volatile, but there's no fundamentals. There's no earnings. It's just bare natural gas. All right. I'm trading stocks like BBD, which is a bank with a P ratio of 6 and dividend close to 5. I was trading NYCB, another bank. Why? Because I'm not going to speculate over here. Okay, SMED, SMED. I got stuck in it. I was trading it last year. They were crushing earnings. Check, SMED. It just got bought out 200% of what it was trading at. The stock, the day before, actually the day that it was announced a buyout, it's $2.80 and got bought out near $9. So the entire company was valued at $50 million and got bought out for close to $200 million. Why is that? Because whenever you want to buy a company getting crushed, you have to pay a premium, and you have to pay out everyone that has the shares, and you have to pay them out a lot. Why is that important? That's telling you that you can buy stocks because the company is making about $10 million a year. So trading 5 times what they make. 5 times what they make, but growing 20 or 30%. So if I decide to buy a stock, the company has to be producing and the stock has to be low. Because if the stock is low and the company is knocking it out the park, there's going to be a big white knight coming in to buy out the company. Why? Because they see value. The company is creating cash flow. The company is growing. There's a reason to have a big white knight. Why did Snap, trading at $17, go down to $12 right away? It only took 3.5 million shares because some big money that was holding Snap dumped market orders, not limit. As soon as earnings came out, market orders. They just dumped Snap. Snap doesn't make any money. Snap doesn't have any positive cash flow. The positive cash flow in Snap is from retail. Retail dumping you shares, are doing convertible bond, borrowing money, Borrowing money, letting the lender know here you can convert it to shares and dump on retail. That's where the money is coming from. They do not make any money. Do not, you know what? I'm not going to say do not. Do whatever you want to do. But for me, I want to buy a company that is making cash, okay? I have a lot of people that still like DraftKings. They still like Hood, okay? They still like GameStop. They still like AMC. Are these companies making money? Or do you think you're buying it cheap and it can't get cheaper? Think about that now. So whenever a company is losing a ton of cash, why would a white knight come in and buy it? Someone just bought 6% of Bed Bath & Beyond? What are they thinking? What are they thinking? Okay, if they want to jump out, because retail pumped it right after that news, they pumped it. So if they're getting out right away, okay. But if you're not getting out right away, you put in an investment of 6% buying Bed Bath & Beyond, you think it's going to turn around? Do you see those numbers? Do you see the cash flow? They went from $1.1 billion. Check the financials. They went from $1.1 billion, and right now they have $100 million. You're better off loaning the company some money so they can keep going. There's other things that they must do, but they're not paying. If they want to pay me, I'll go in and consult them. Charge $50,000 a week because I'll come up with something in a week. If I don't come up with something good in the week, I might have to say you have to sell out your company or go bankrupt, whatever the case is. It could be bad news. Respect Marcus Lemonis, the CEO of Camping World CWH, the prophet from CNBC. I respect that guy. You can look up the prophet probably on YouTube or take a look at those videos. This guy is awesome. Awesome with cash flows and turning a business around. I'll do the consulting for a lot of companies. $50,000 a week. I can turn around your company. I'll tell you that, listen, let's bail out. Let's bail out. Well, what I'm saying, once again, is you better, I'm not going to say you better, but me, I want to buy a company like 1W, ONEW, that's making cash, crushing it, slamming it, and the stock is getting killed. CYH. Last week was 330. It just hit 505 after HCI slammed earnings. Why was CYH 330? It had no business being 330. Now, I already bought shares at 505. Some of my rules is not to buy more than 2 blocks. So there's no FOMO here. I'm not mad I didn't buy it cheap, but it's right back near $5. Why? They make money. The financials are good. Not great, but they're good. If they're bringing in cash flow, there's a reason to own it. Someone else is going to look at it too, and they're probably going to beat earnings because you know what? United Health beat earnings. HCA beat earnings. THC beat earnings. They're in the same sector beating. That's what I want. I want CYH. I want 1W. I might have won SMED, but the problem with SMED, and I wrote about it on Reddit, when it was hot, because they do medical waste, the volume was 1 million. When they finally got bought out, the volume went down to 50,000. This is the popularity contest. No one even cared about SMED. The stock just kept dropping until a white knight came in and paid $9 for it. They're paying $9 in cash for SMED. They see the value and they're buying out the whole company because the company is creating something. That's what I want to buy. A real company creating something. Because a private equity or big money is going to see these companies and be like, you know what? This company is trading at 3 or 5 or 7 times how much they make. So if I buy the company, I get their assets, I get their customers, and in 3 years, 5 years, I make back my investment. That's what I want to buy. If you want to buy companies that aren't making money, that's up to you. So once again, I have about 5 puts. I was up on GameStop puts about 10-15%. I have AFRM puts, IRTC puts, and all the puts I'm buying are October or November dates, Roblox puts, because I want time, because the market, there's too many apes. They're bidding up stocks, not paying attention, and that's not me. and I'm not spending more than $2,000 a put. Actually, GameStop puts are $2,500, but most of the puts I'm buying is $2,000, $2,500. When I'm buying stocks, I am doing more money, but I'm buying stocks of companies that are making cash, staying away from companies that make no cash, won't be making cash. If the market is bullish, you can buy those stocks. All of a sudden, you can go with stocks with a 50 PE, 75 PE, because we're in a bull run. But when we're bearish and the S&P is trading at 16 times, 17 times, I don't want to buy a stock at 16 times, 17 times. No way. You see everything going down? I want to buy something at 3, 4. BZH. Take a look at BZH. BZH hit $10 a couple of weeks ago. Now it's back to 15. I was always trading BZH. But I got scared. Because rates were rising. Everyone is crushing the stock. So it dropped down to $10. BZH. Take a look now. Back up to 15. 50% a safe stock. And they're going to make they said they're going to make $5 a share. And I believe them. Because check earnings. They've been smashing earnings. So it's a home builder. They were going to make $5 and the stock was 10. 2 times PE. I was even telling a lot of people, you know what? Buy BZH. Buy X Steel. I'm telling a whole bunch of people to buy X. They sold X this week. I'm glad. That's what I want to buy. I've been trading X too. P ratio is near 2. I'm down on Zim, but P ratio is near 2. I'm okay with that. So that's what we're going to do. All right. Good luck.